Hello, ETF fans. This is Will Smith with ETF Action. Today is October 24th, 2024. And for today's video insight, we're going to build a high income, high yield 50/50 model portfolio using the screener tool to first identify high yielding ETFs that provide beta exposure to a handful of broad asset classes. So, to get started, we're going to open up the Home Office dropdown and press the Screener tool. From here, we're going to build our universe to select our ETFs from. So we're going to start with ETFs, and we're going to also do ETFs with AUM above a billion and expense ratios below 25 bips. From there, we're going to move to the Classifications tab. I'm going to narrow this down just by equity and long only equity ETFs, just so we can find our 5 equity ETFs that have high yield and provide that beta exposure to select asset classes. From there, I'm going to move to the equity derived analytics, which we briefly touched on in last week's video insight. I'm going to move over to the yield tilt, and I'm only going to select my universe with ETFs with high or above average yield ratings. So once I press apply here, we can see that there's only 53 equity ETFs with over $1 billion in AUM with an expense ratio below 25 bips that have a high or above average yield rating. So from here, I'm going to scooch over and see the TTM yield. And just to make sure we are getting the highest yielding ETFs on the equity side, I'm going to sort by rank. So from here, I'm going to just scroll through and select some ETFs that represent some broad-based asset classes. So SPYD, that we're going to choose for our US equity exposure. VNQ, got to get a little real estate in there. Next, we're going to go developed markets exposure with VEA. And then emerging markets equity, SCHE, for our emerging market exposures. Now, let's say I did want to include some small cap exposure. Next, I'm going to scroll back up and look at the size assignment. Here we can see that largely it is large cap ETFs, but I want a small cap ETF in there. So I'm going to press small cap and press apply. Here we can see that the SCHC, International Small Cap Equity, realize that's international, but we're going to include it anyway just to see how this model turns out. So again, we've quickly identified 5 ETFs that provide broad exposure to US equity, real estate, developed ex-US markets, emerging markets, and small cap international equity. Now, for our fixed income side, I'm going to press the clear button. I'm going to head back to the basic tab. Again, we're going to do ETFs with over $1 billion and under 25 BIP expense ratios. I'm going to head to classifications, and I'm going to do fixed income and long only, and then hit apply. From there, I'm going to do the exact same thing. We want to focus on the highest TTM yield. So we've already got it sorted by rank. So now let's just identify 5 fixed income ETFs that represent a few different asset classes. So to start, high yield corporates, let's do SPHY. Here, PFFD for our preferreds. Let's do GSY for our ultra short duration ETFs. SCHI for our mid duration ETFs. And finally, VCLT for our long duration ETFs. So again, just in a few clicks, I've identified high yielding fixed income ETFs that also provide beta exposure to broad asset classes within the fixed income universe. I did the same thing with equity ETFs. So now what I've done is I created on our other screen here an equally weighted upload file using those 10 ETFs that we just identified. So I'm going to refresh my screen, and now it's time to build our model. So we know how to do this, but once again, open up the Model Tools dropdown, press Model Builder. Again, we're going to do Model instead of Blended Model. I'm going to press Next. Now we're going to do High Income 50/50 model. I'm going to do a rebalance frequency of quarterly. And I'm going to do my benchmark against the 50/50 global ETF action benchmark, which is essentially 50% ACWI and 50% AG. Again, you all know this, but only these top 4 parameters are required to create your model. All these are just settings that we can update after the fact. But for this example, we're going to do Smith stocks. Security type, they're ETFs. Strategy, we're going to do factor. Risk, moderate. Asset class is asset allocation. Implementation, we're going to do passive just because it's quarterly. And then ESG, no. Tax managed, no. So that's just an example. We can change those after the fact, but now we're going to actually build our model. So we press the next button. We're going to head to upload CSV. Here we can see we've got our upload file. We're going to press upload. Here's our 10 securities. Everything adds up to 100. Here we can see that our inception date of our model is going to be October 10th, 2019, because that is the inception date of SCHI. And inception dates are the earliest common inception of all your holdings. If we wanted to extend that, we could just come back here and add a proxy ticker if we would like. We're not going to do that for now. I'm going to press submit and build this model. Boom. So that model was built. Now we're going to open up my marketplace and see how it compares to this 50% ACWI, 50% AG benchmark. Again, we can see the holdings breakdown here, yesterday's performance for all the holdings. We can see that we're getting a nice TTM yield. Performance-wise, actually outperforming that 50/50 over the last year. However, across the 3-year, the benchmark is outperforming by not a huge margin, but noticeable. From a composition standpoint, a fundamental standpoint, we can see that the dividend yield is much higher than that benchmark. Much cheaper from a valuation standpoint as well. In fixed income, fairly consistent in terms of duration, but much longer in terms of effective maturity. Now, let's just say, because I just randomly picked those 10 ETFs that represented those broad-based asset classes, I wanted to do some analysis to see how my overlap was on this model that I just built. So I'm going to head over to Tools and Reports. I'm going to click the Overlap Analyzer. This is going to populate all the equity ETFs held within the portfolio, or ETFs that have equity holdings. And we can see that this model has little to no overlap across the board. So we did a pretty good job in terms of selecting ETFs that not only are high yielding, but also don't have a ton of overlap with the other holdings. So back to my marketplace. If I was interested, I could also run a bunch of reports against this benchmark, but to save some time, I'm not going to do that. So to recap, we use the screener tool, which is located under the Home Office dropdown, to quickly identify high yielding or high income ETFs that represent broad-based asset classes in the ETF universe. We also included ETFs that are only over $1 billion in AUM with expense ratios of less than 25 bips. After identifying those, I quickly used the model builder tool to build out that model, compare it to my benchmark, and then check the overlap. So we hope you enjoyed today's video insight. Please do not hesitate to reach out to us at team@ETF Action if you have any questions or if you'd like a demo on the platform. We hope to speak with you soon and appreciate you taking the time to watch today's video insight. Thank you.